I'm Anthony Gerbi with Stein Financial Group, and I'm here to help you make the most of your opportunities under current tax laws. We have a new administration in Washington, and the Democrats control the House and the Senate. So, what's next for taxes? In this video, I'm going to talk about what could happen and what you could do to potentially maximize your tax savings before the rules change. We don't know when tax laws might change, but we do know they will at some point. That's what tax laws do. But in the near term, we can expect lawmakers to focus on urgent issues like vaccine distribution, stimulus aid, and the economy. But at some point, a new tax plan is likely to show up, and the Biden administration is likely to raise taxes, at least for some folks. Hopefully, not until the pandemic settles down and the economy gets stronger. But if 2022 sees tax rule changes, 2021 might be our last chance to take advantage of the current rules. So, what actions can you take now to make the most of today's low tax rates? Here are some key areas of interest you might want to consider for 2021. Number one, Biden's proposed tax plan targets high income earners for an income tax hike. If that's you, 2021 may be an excellent time to consider accelerating income, especially if you own a business, or completing a Roth conversion. These are big moves with financial consequences, so you'll want to get advice before you pull the trigger. Number two would be estate and gift tax exemptions went up to 11.7 million this year, but they might drop again under a new tax plan. That makes 2021 a critical year for estate planning. Please don't think new laws couldn't affect a much smaller estate either. You don't have to be a cajillionaire to be affected by this. As recently as 2001, the federal estate tax exemption was just $675,000. It's not likely that new rules would go back to such low levels, but I don't want anyone to be caught flat footed by such a change. Number three, deductible retirement plan contributions might be treated differently for tax purposes in the future. If you're a high earner, maxing out deductible contributions this year and considering a Roth style plan for the future might be smart. Bottom line, tax laws are in a constant state of flux. We don't know when the rules will change or what they'll look like once Congress gets done haggling over them. But we can take some proactive steps now. And part of my job is to help you stay on top of the rules and maximize your opportunities every year. So if you have a question about the three items I discussed in this video, or you'd like to speak personally about what's going on, please send a message to our email at stein@steinfg.com. That's stein@steinfg.com, Stein, and we'll respond personally. Thanks.